In today's video, we're going to be talking about the trade desk. I'm going to give you guys an update of what things look like for the company after they just reported, in my opinion, great Q3 earnings. They raised guidance, yet the stock still saw selling pressure afterwards. Sometimes there's just no rhyme or reason behind it, although there is still some skepticism, and there's a reason why investors are still not all in on the trade desk. So we'll cover that as well. And then we'll look at their most recent earnings report. We'll go over some fundamentals and projections of where the company is, projected to go when it comes to revenue and EPS. And then we'll look at the forward price to earnings, one of my favorite indicators, to see if a stock is undervalued simply based off of that. And then towards the end of the video, we'll look at the charts. We'll go over some technicals and overall just try to decide whether or not the trade desk is still a good buying opportunity after they reported earnings. So let's jump right into it. First things first, let's talk about why the trade desk is down to begin with. And I'm going to leave timestamps down below so you can go to the part of the video that you find the most value in. But anyway, the main reason why the trade desk is down is just because there's a lot of competition that is entering the market. So just recently, Walmart came out and said that they're going to be a DSP player when it comes to advertising, right? And Walmart's a pretty big competitor, right? And then there's other companies coming out here offering the same types of services as well, like Amazon is another one. And so the fear is, yes, the trade desk is growing at excellent rates and everything looks great for the company, but are they going to be able to hold that up once the competition starts to get a piece of the pie, right? So I don't know. In my opinion, I say no. I made another video about the trade desk a little while ago, and we talked about how this is a $3 trillion market, I think, by like 2030, right? And it's a huge market right now. So, it's like, yes, the competition is not going to make things easier. It's not going to just give the trade desk, easy numbers to comp and beat, but it doesn't mean they still can't be a very, very good company. This is also something to consider, all right? So you have like Walmart offering these services, but there's a problem here, in my opinion. Walmart, although they might offer the same type of advertising to other businesses, is great. But check it out. They're also a retailer. So they're going to be selling advertising to another retailer. But is that not a conflict of interest, right? Like Walmart is a retailer. Amazon is a retailer. Do you not think they might be a little bit biased? That is one thing and one big reason why I like the trade desk over companies like that, just when we're talking about the advertising business, right? Obviously, these companies have big moats and a lot of other avenues of revenue, and this is just one more to add on, right? And so I get it, right? They're big companies, they have the money to invest and to do these things, and at the same time, it also probably makes their advertising expenses cheaper as well. But when it comes to the majority of companies out there, I still feel they're going to go and gravitate towards a company like the trade desk simply because you don't have that conflict of interest, right? So that is my 2 cents on that. You let me know what you think in the comments, but let's go ahead and check out their most recent earnings report because it was pretty good. And we're just going to check out some of the key highlights. And this was one slide that they had from their presentation. I thought it was pretty interesting, right? Just to see how the company's been growing. Look at this. May 2011, an 8-cent day, right? 2012, their first $1 million month, first $1 million day. You get the idea, right? First $1.5 billion quarter. I mean, the amount of growth that this company has seen has been very, very impressive. So I just thought this was a pretty cool chart to look at. All right, so the next slide, the trade desk by the numbers. We have their gross spend here, which is, how much money they're spending before deductions and things like that. And you can see here, obviously, we don't want to spend a lot of money, right? I want to see this come down, but it looks like it's coming down, right? Like they were spending a ton of money over here, and you can see it's kind of yes, this is on a trend up because it takes money to make money, but what we want to see is that the cost, to grow revenues is coming down. So not too bad there. Obviously, we want to see this number keep coming down, but nothing to really complain about. Then you have your revenues over here. You can see this chart. I mean, I think this just paints the perfect picture, right? Like this revenues are just on a steady incline up. And I mean, you see they're growing around 30 to 26, so average like 25% a year. That's good, right? That's nothing to complain about, and they're going to have a very successful business if they can do that. And so while we're talking about the numbers, right, let's talk about where they came in on their earnings, right, compared to the analyst estimate. So Q3 2025 earnings, revenue came in at $739.4 million versus the analyst expectations of 719 million pretty much. So that represents a 17% year over year increase. Looking good. EPS came in at 45 cents per share. The expected was 44 cents. So that obviously was pretty much in line with expectations. Operating income was a significant beat. And then their Q4 guidance, right? Their midpoint revenue guidance was 840 million, was above their estimate of 831 million. So that is pretty substantial. And I don't know how many times I have to mention this. Usually, when a company comes out, double beats, and raises their guidance, and the stock's been beaten up so much, trading at such a low multiple, it usually goes up, but not in this scenario. And I wanted to throw one other nugget in here real quick, and that's the fact that the trade desk announced a $500 million buyback program. And this is typically bullish for a company, one, because obviously the company feels confident that the stock price is going to continue up and that these are good valuations to go ahead and do that at. And this also increases the demand and restricts the supply, right? Supply and demand, obviously the less shares on the market, the more the stock price can go up and stay up. So as we mentioned, the open internet is a huge market, currently valued at about 935 billion. I mentioned what this is expected to grow to, by 2030. So we still have a long ways to go, honestly. And you tell me, do you think advertising is going anywhere? I don't see a world where businesses do not need to spend on advertising, right? Like, I'm in real estate, you have to advertise. And luckily I have a team leader who has his own YouTube channel, right? And that's where he gets a lot of his leads from. But he's also spending a lot of money in SEO and on his website and this and that. And I was with another team that was, spending like $15,000 a month on Zillow leads, right? Like, that's pretty substantial. And in some scenarios, it was even more. And it's because it takes money to make money, right? But nonetheless, you have to advertise. There is so much competition out there, and that's really the only way to get ahead of the competition, right? To get your brand out in front of everyone else before the other person does, or just do it better, right? And obviously you have to execute on top of that, but nonetheless, you get what I'm saying, right? Like, I don't see advertising going anywhere anytime soon, and it's a huge market, and this kind of just breaks it down right here. All right, so this slide is interesting because, as I was mentioning before, right, the trade desk aligns with the agency's brand, right? So they're on the buy side of things on the advertising, right? They're not a publisher. They're not selling any products, right? They're not a marketplace. They're not doing their own advertising, none of that, right? They just simply are on the buy side of the transactions. And then so this next slide just kind of breaks down where all these different companies kind of fall within this bracket, right? As you could just see there before, they power some of the biggest companies in the world as it is. So this next slide just shows how diversified they are, and it shows, like, again, how every single business needs advertising. I mean, check this out. Food and drink, 18%. If we go into a recession, food and drinks, they don't go anywhere. Medical health, that's probably not going anywhere. Obviously, some of this is, right? But I guess my point is, it's not like they're just, all in on a couple companies, and God forbid, a food and drink beverage company finds another company to do their advertising. It's not going to be the end of the day for them, right? I mean, they're diversified well. All right, so moving on. I just found this to be interesting. As we mentioned, they're partnered with a lot of companies already. We buy the whole internet. I mean, look at some of these companies down here. Netflix, Spotify, even Walmart, which obviously that's why that was pretty big news, because Walmart was going to go do their own thing. And therefore, obviously, that takes a lot of market share away from the trade desk. But that's not to say that Walmart still won't use the trade desk for some of their advertising, right? But they might not need as much. Also, we're going to get into this in a minute, but it's going to take a company like Walmart a lot longer to get as efficient as the trade desk is when it comes to advertising. Like, you have to remember that. Like, it's not just easy to advertise in front of people. You have to really have the data behind these decisions, right? And the trade desk has that. And this slide right here shows it, right? We buy data to make better decisions. And this is huge, right? It's not cheap to buy data, but the more data they have, the better decisions they can have, the better outcomes that companies have, right? Or retailers have when they use the trade desk, which brings them back more, right? If they use the trade desk and then they use another company, right? They both spend 100 million with both companies, right? But one company nets them an extra, 50 million, right? And the other company nets them 25 million. You get it, right? They're going to go with the company that is working better, right? That is more efficient and is taking their dollars and turning it into more dollars, right? This is just kind of a glimpse of their data management platform first, right? So the buyer with the most data can make the most intelligent bid. Duh, right? That's what we were just kind of talking about, right? Like if you have more data on people, right, you know how to put advertising in front of them, right? I mean, it's pretty crazy. Tell me you have not seen this, right? Like I'm sitting here talking about buying something, maybe I'm buying a car, right? And I'm talking about it. Next thing you know, I go on my Facebook feed and now I got pictures of cars coming up. I'm like, what? Did I type that in? Like, are they listening to me? They probably are, right? We're sharing our data with Apple all the time, right? Like it's a big thing. Like you always get that coming up on your phone. Do you mind sharing your data? Everybody wants data, right? And some companies will go out and purchase companies just to have their data, right? Either way, nonetheless, that is one thing good about the trade desk compared to its competitors, right? This is their sole business. Like remember that, right? It's like let's say you want to be a great YouTuber, you want to be a great real estate agent, you also want to be a life insurance agent, and you wouldn't mind flipping houses on the side as well, right? Like when you have your hands in so many pieces of those pies, you can't be great at all of them, right? You have to really focus in on one or two areas and take it all the way with that, right? Obviously, as you get bigger and you can delegate tasks and this and that, yes, you can grow companies and you can grow and you can do it all, right? You get what I'm saying, though. It's just the trade desk is solely focused on advertising, and if that is what you're looking for, in my opinion, they're just going to do the best job at it any other company out there. And so another thing that they had mentioned too in their earnings report is just the fact that they have like so many more markets that they can enter into. You can see here, like the majority is in North America, right? 88%. But look at all the growth they have over here still, right? That's only 12% of their spend right now, 60 and then 40. Nonetheless, there is still a lot of room for growth, not to mention that just even in North America, the room for growth is going to keep growing, right? But then they can also tag into these other areas of the world as well, right? And then we'll end on these slides right here. Robust revenue growth. We kind of went over that in the first couple slides, but you can just see here, right? I mean, look at this. I mean, just insane this trajectory that they're on, right? Yes, there's always a little ups and downs, but overall the trend is up. And we're going to look at some, future projections of the company here next as well. And then you can see here their adjusted EBITDA also looking great. And then their non-GAAP net income also not looking bad. All right, so next we're just going to go over some more fundamentals real quick, some charts that I put together. These also show some future projections as well, which I like, based off of what the trade desk is guiding and based off what analysts believe is going to happen with the company. But you can see here, right, the cost of sales. I always like to bring that chart up because we don't want to see this growing with revenues, right? And it's not. It's obviously getting higher, but it's growing at a very modest pace and nothing to really be worried about. And then you can see here the total revenues looking very, very nice. That is projected to kind of flatline around 17%, I guess is what they're looking at. But nonetheless, I mean, look at this. This looks great, right? And this is projecting into 26 and 27. So I just find it funny that the stock's trading at like all-time lows pretty much, or 52-week lows at least, and yet the company has not seen any declines and it's just projected to keep growing. And I know what it is. I mean, it was just trading at too high of a forward price to earnings. We'll talk about that in a little bit, but anytime a company trades at a very, very high multiple, it better have perfection every single earning. If not, it's going to drop, right? It's just because they're pricing in a lot of growth and they're also pricing in perfection, again. But we're going to jump into the PE ratio here shortly. And so moving on to the next slide, we have the consolidated net income, right? Look at this. Wow. I mean, just growing. All right. We had a couple hiccups down here. It's normal, right? You're going to make investments and buy companies and do this and that. That could take a hit on net income in 1 year. But look, overall, we're growing very nicely. Moving on to the free cash flow. I don't think I need to spend too much more time on that. Wow. I mean, look, project it in 26 and 27 to grow pretty substantially. So I don't see anything wrong there. Man, we always talk about how Meta is a generating cash machine, right? And a lot of these companies that are just apps, I guess you could say, look at these profit margins, though. Gross profit margins around 80%. That is awesome. I mean, I love companies and business models where it's just all profit because it's so hard for a company like that to fail, right? This is also probably a reason why at one point it was trading at a very high multiple. But hey, I love this, and it's coming down a little bit, but that's just, we're right around this average, right? You can see here, I mean, this is going back a pretty long time. That doesn't change too much. We have also operating margins are growing. And then here in the blue line, we have the projected EPS, right? Expected to grow, more than double in 2 years. So, don't see any issues there. And then we have the operating profits here in the purple. Look at this. I mean, growing as it is, we did take a little dip here. Okay, I don't know if that could be something that could concern investors maybe, but it happens, right? We always mention this. It's never a straight line up, but look what's projected. Okay, so as long as they stick to the plan, they came in, they guided higher. So in my opinion, I think they should be good. And then we have the balance sheet, looks great. Company's in really, really good financial health. No issues here. All right, moving on to one of my favorite indicators, right, is the forward price to earnings. Okay, so forward price to earnings, just expect it what the company's, growing to in the future. And so I like to look at this one simply because most investors and Wall Street is all forward looking. That's why you might see stocks go up on bad earnings, because yes, maybe they did not meet expectations, but what they did do is say, hey, but things are looking really good next quarter, right? That's good enough for investors to go, all right, we're in for now, right? So nonetheless, check this out. We are trading at a 22 forward price to earnings. This has been the cheapest that you've been able to buy the company since back in 2018, pretty much. Okay. Let's see. And then again back in 2017. But you can see this. At one point, this company was trading at 193 forward price to earnings. Like, this is when things get scary, right? Like, if this stock was down this low, like the stock price overall, but yet it was still trading at like 100 forward price to earnings, I'd probably be out. I'm like, nah, it's still expensive, right? It's expensive, and then you have fears behind the company as well. But when you get down here, I'm sorry, man, like this is starting to be like a no-brainer to me. I mean, it's getting super cheap. You can see it hardly ever gets that cheap. Maybe it goes a little bit lower during earnings. I'm sure if you're watching this, I mean, the stock dropped like 15%. We're up a little bit since then. I mean, this probably didn't reflect it because it was in after hours, but I bet you this dipped down here to, at one point where it was probably showing that this thing was trading at like a 17, right? Which is the lowest that it's ever been. So that's one thing to keep in mind. And when it comes to a forward price to earnings, yes, the stock is undervalued. Okay, so those are my thoughts on the trade desk, going over the fundamentals, where the company is headed, the PE ratio. Now let's jump into the technicals, and I'm not going to spend too much time on this because I've made multiple videos of the trade desk now, and not much has changed. With that being said, if you feel like you might have missed your opportunity, I'm here to say you have not. Here I have the weekly time frame pulled out. So obviously, yes, this is a very big picture. This would be like more of a long-term swing trade, right? Nonetheless, we're at a very, very key level right now, okay? You can see that the RSI is pretty much oversold on the weekly. You don't ever really see it drop below that line, right? Like, not in the history of the company, which is pretty crazy. We've already dropped below it. We've touched it. And you know what? I'm just now realizing this on the weekly. We have a divergence here, right? So we have the RSI making higher highs, and we have the stock making lower lows. I just noticed this. This is very juicy stuff here. So this is a bullish divergence right here. Okay, again, when the RSI is showing higher lows, but yet the stock is making lower lows, that's a divergence. Okay, nonetheless, we are in a big demand zone too. I mean, look at this, man. Like anytime the stock, when I say demand, it means when the stock gets to this level, it has a lot of demand, right? People buy the stock. I mean, check this out. This is the first level, right? Where we broke above, we came back down, we tested it. Everybody bought this up, sent the stock shooting up 130% in about 3 months. Insane. Obviously, yes, this is a very volatile stock. In my opinion, if it ever shoots up that much, take your profits, get out, like over here, right? Moving on though. Again, very, very big demand zone. You can see it here. We only wick down here on the weekly. It gets bought up within the same week and comes right back up, right? Every time. Even here, we touched it, bought up like crazy. Once again, bought up. Now we're back at that level again, okay? It's to argue that we could drop down and maybe wick a little bit lower, but I will say this, okay? Have your stop loss in place, have your risk in place. We never know what's going to happen with the market. If we do break this level, then it's just going to get more ugly. I would say probably it could wick almost down as if it looks like it's going to break, and that's where you have to be careful, all right, when you have your stop loss out here, because what they'll do is they'll do a liquidity grab before the stock goes higher. So, you'll put your stop loss down here, right, wherever you decide. When we zoom in a little bit, you get a little bit of a better picture. Let's say you put it right here. I could see this stock just saying, boop, dipping down here, stopping everybody out, wiping out a bunch of liquidity. All the big investors get in, the stock shoots up, right? The only reason why it's tough to have stop losses on a bigger time frame trade, in my opinion, your stop losses has to be a little bit more lenient. But again, that's up to you guys. This is not financial advice. Don't copy what I'm doing by any means. I'm here to give you my ideas, and then you go and make your own informed decision. So you can see here, again, we're at this big supply zone. We did break this level of support right here, okay, and kind of made a lower low, as I was mentioning, even though the RSI, even on the daily, is making higher lows, right, kind of still keeping that trend. So be curious to see what happens here. But nonetheless, I think this is a great time to start dollar cost averaging in the company, right? I feel like there's way more upside than there is risk right now. And if the stock does keep dropping, just keep buying. In my opinion, again, not financial advice. Just keep dollar cost averaging though. DCA the position, and then, wait for it to reverse. This thing, when it reverses, it goes quickly usually, okay? We're going to zoom in a little bit more here, but what I can see happening, the next level that I would watch if you're swinging this, let's say, is right here where these moving averages are, okay? You can see that we can't break them, right? We come up, we test, we get rejected. We come up, we test, we got rejected. We'll probably come back up here again. That's probably where the stock's getting ready to head right now. It's about a 15% move. I could see us getting rejected off here again. What we're looking for, though, is the stock to get rejected and then to come down, make a higher low, right, and then continue higher. Could the stock just go do one of these things? It can, right? I mean, it's done it before. Again, when it moves pretty quickly. But assuming some big catalyst, I don't see that happening. So that would be my next level, right up around here, that $51 range. And if we zoom in, okay, pretty much right where all those moving averages are. You see that, right? This would be the next level of resistance, right around here. So if you're in the stock now, maybe you bought the dip down here, you don't want to hold it for the long term, right? You want to just kind of get in, get out. This is where I'm taking profits, okay? Now, when we break up above this level, hold and break this level, it breaks this bearish structure, and at that point, we are headed higher, and typically it moves very quick from there. And what you see a lot of times when you see a big sell-off like this and the stock gets back up to here, right? When it finally breaks, it typically fills this gap, right? Fairly quickly before getting rejected. And then just real quick, what I went ahead and did, if you just guys want to take a screenshot, I just literally just marked out all the levels that I had to be keeping my eyes on, right? These are all levels that I would consider on taking profits or, looking for it to break out of, come back down, retest, right? And then head up. So these are big levels. These are always, previous resistance levels and also previous support levels. Those are our levels that we're looking for, right? So our next immediate level right here, and then we're going to, jump up here to 55. Next level after that would be around 62, okay? Then 68. To be honest with you though, like these levels aren't not that secure. You know what I mean? Like there's not a ton of support here. I do think there could be some rejection, but again, there is that chance too. This thing just rips right back up to here, right? Because you can see, it didn't have much going on here, right? When we dropped, it just dropped right off. There was nothing holding the stock up. There's just no demand, right? So this level right here, $80, I think that's pretty key. And then obviously the $91, that's where we petered out before. And then real quick, just for shits and giggles, let's take a look at some price targets. We have 37 analysts covering this stock. Not too shabby. Most with the buy. There are a good bit of hold as well, with the low on the street of 34 and a mid price of 63. So, hey, just to see what kind of upside if we made it back to what most analysts would project this stock to be at the end of a year, right? Which, what do you know, right around that resistance level, right around $69, that's a 55% return. Even if you held this stock for 1 year, and it took 1 year for the stock to make it up that high, which watching this stock in the past, it typically goes a lot quicker. once it starts to move. But that's not a bad return. I mean, think about that. 55% in 1 year when there's people out there saying, hey, put your money in the stock market because you should be making at least 10% on your money a year. What? I mean, look at the people that put their money in Palantir, making like thousands of percent. And that's one reason why I like to make these videos, right? Because there's so many people out there that want to be financially free and they want to manage their own finances and they just don't know what's out there. The government pretty much like molds you to think like 10%, guys, like that's enough. That's all you need. 10% a year and you're good. And on average, that's what the stock market does. And that's kind of where they get that from, right? But there are so many other opportunities in the market. Obviously, with higher risk comes higher rewards. So always put your stop losses in place and take your risk into consideration, right? And your position sizing, right? Think of all these things before you take a trade because they're not all going to work out. One thing we do know, though, when we're investing in higher quality companies, and I would consider this higher quality. I mean, they have business partners with Hulu and Netflix and Walmart. Like, come on, guys. Like, they're a well-established company with very good partnerships, right? This is not some speculative stock, right, that just IPO'd and we know nothing about. Like, no, we got a lot of data on this stock now. They've been performing very, very well. When you invest in companies like that, whether they go up or down in the short term is pretty much irrelevant. As long as they stick to their guidance and their business plan, the company's going to be higher 1 to 2 to 3 years from now, right? You're going to make a return on your money, right? Obviously, we all want to make money as quick as possible, but that's the one thing you have to remember, right? When you're investing in the stock market, it's not always going to be pretty, but as long as you're investing in high quality companies, there's nothing to worry about. Keep dollar cost averaging your position and wait it out, right? It's as simple as that. Nonetheless, that's my 2 cents on this stock. Let me know what you guys think in the comments. If you're still here, please, if you haven't already, consider liking this video, subscribing to the channel, and I'll see you guys in the next one.